All right, hello again, everybody. This is Mike with NetPicks. Thought I would take a few minutes here, record a quick video to walk you through some of the recent trades that we've closed out over the past week or so with the active swing trader. As many of you know, the markets have been very active over the past week or so. As we wrapped up the week, we really saw that selling pressure intensify, which is something we really haven't been able to say much over the past year or so. 2013 was just a slow grind higher seemingly day after day. So this pullback over the past number of sessions has done a few things for us. Number one, a lot of the names that we look at have been very overextended on the upside, trading at or near all-time highs. So the pullback, it allows us to consider new trades at better prices. Number two, it also gives us a spike up in volatility. Okay, over the past year, really over the past 2 years, and to stretch it out even further, we've been stuck in a very low volatility environment, which does limit you somewhat on what types of strategies you can use as an options trader. Doesn't mean there's nothing to do, it just means that our playbook shrinks down a little bit. So with us seeing that spike up in volatility that we've seen over the past 3-4 sessions, that really starts to open things back up again. So this is a prime time to be involved in the markets, specifically on the stock and options side of things. The only tricky part about the last few weeks, we are now right in the middle of earnings season. Okay, and as many of you know, during earnings season, you tend to see those large gaps right at the open. Apple being a perfect example of that here today. Apple released earnings after the close here yesterday, and then gap to the downside here today by about $40 or so. Now, if you were playing the downside on Apple, that's just fine. You had a very profitable day. But what happens when you were playing the upside? Well, that can cause some pain very quickly. It's just not something that I'm willing to do myself. It's not something that I want to be involved with because I don't like the reward to risk ratio. Okay, what I'd rather do, we're plenty active enough throughout the rest of the year. If I have to sit out a few trades around earnings, I'm more than willing to do so. With that being said, I don't want to necessarily be stuck on the sidelines during earnings season. I want to be involved in the markets. I want to be taking trades. So the approach that I typically take, typically the 3-4 days around a stock's earnings release, those are days that I typically want to get flat and stay flat until the earnings have been released. So it's during those stretches that I like to focus on the ETFs that are a big part of my watch list. Now, for whatever reason, a lot of times when I talk to traders, they just have it in their minds that you can't see the home run trades on the ETFs. Well, I'm going to show you a series of results here today where you can still see those 70, 80, 100% returns on the options in a very short amount of time. And you can do so with limited risk. So nice position to be in. So we're going to dive right in here, walk through a series of trades, and we're going to start out with the Dow. This is the ETF that tracks the Dow. So it's symbol DIA. So as always with the active swing trader, we like to use range charts. So this is a range chart of 75 cents, meaning that every bar here on this chart represents a move of 75 cents from high to low. It has nothing to do with time. Okay, these bars could take 5 minutes, they could take 2 days. It all just depends on how active the market is moving. So there could be days where you could get 2 bars in a day. There could be days where you get 4 or 5 bars to close in a day. The reason I like that is the system really self-adjusts to the current market conditions. We're not forced to look at candles or bars every set amount of time like a time-based chart. So the range charts, they can really smoothen things out for you. You really get a clean look on your chart. So when we came into last week, did we have an opinion on where we thought the market was going to go? Okay, sure. I mean, we are at elevated levels. I've been talking to my students for weeks now, just saying, we're going to get a pullback here very soon. We're at very extreme levels on many products. Volatility, specifically the VIX being one of those. The VIX was getting very low, and when you get into those environments where there's no fear, you're anticipating a market pullback. There's just way too much complacency. So the problem with a lot of traders is if you don't have a system that's giving you exact entry points and exit points, how do you know when to get in or when to get out? What levels do you get in or out at? So it just makes it very tricky. Whereas if you take a look at this chart, the active swing trader is going to give us very exact entry and exit points. Okay, when all of our criteria is met, we get our entry point to print on the chart. We get our targets, which are the green dots. We get our stops, which are the red dots. So we know before we ever enter a position exactly where we're going to get in, where we're going to get out. That's very powerful because it allows me to get on with my day. It's not a situation where just because I have a trade on the table, I have to sit there and watch every tick throughout the day. Okay, in fact, that's something that I try to avoid at all costs. I don't like to stare at the charts all day. I like to get my trades on the table, move on, get things done, and wait for a target or stop to be hit. Because what happens when you get away from the charts, you start to minimize that emotional aspect. That's such a huge part of trading. And what I'm talking about there is when you get into a trade, you start to make mistakes, you start to overreact because the market starts to move either in your favor or against you. Well, when you move on with your day, you know you have your trade on the table, but you kind of block it out. You don't have to worry about overreacting. So with the active swing trader, I already know what I'm going to do as soon as I get into this trade. I already know where my targets are at, I know where my stops are at, and notice what happens when we start to move into profit. The system moves our stop up from the full level and we start to trail the signal line. Okay, nice position to be in. I don't have to sit there and come in and calculate stops multiple times each day. It's already done for me. So in this case, on the downside, the way I played this, I went in and I bought the January 165 weekly put for $2.25. So this put option gave me control of 100 shares of the Dow ETF at $165 a share, and I paid $225 per contract. So as you can see, this is a very manageable trade for most retail traders. Okay, if you've got a larger account size, you can come in and trade multiple contracts here just as easily. So it's a very, very good trade for people of all skill levels and for people with all types of account sizes. In this case, fortunately for us, as I mentioned here earlier, we did see a pretty large sell-off to close out the week. And this trade here, I ended up closing out of my put position on the Dow, booked a $285 profit, and that was a 127% return. Okay, pretty phenomenal. And this was an ETF, so it does a few things for us. We're not overly exposed to one individual name. Okay, we're not overly exposed to one specific name gapping up or down by 20% due to an earnings release. So it's a safer way to stay involved in the markets and still giving us the opportunity to book those home run trades. And 127% return in my book, that's a home run return. So really, really nice trade there. So now at this point, what do we do next on the Dow? We wait for the calculator to print our next setup. So you don't see anything printing here. Okay, so we're sitting on hands. We're just going to wait for the next market move. Personally, I don't think the low is in yet. So I do think we have another move lower. And if we get that break lower, the system will give us a short setup. Okay, in this case, all we need is a close back down below our signal line, and we can look to go to the short side once again. So really nice trade there on the Dow. The S&P, we played this move to the downside as well. Really, really nice return here on the S&P. Active Swing Trader just does a phenomenal job of identifying those setups. So I didn't even get a chance to mark this trade up yet. This was another 80% winner here on the put options on the S&P. Okay, so just a phenomenal way to stay involved in the markets. Let's get back into some of the other ETFs. Take a look at XLF. This is the financial ETF. Okay, once again, last week, the financials, I preach this to my students all the time. You want to make sure you have access to at least one of the financial names as part of your watch list. The financial names, if you take a look at the past couple of months, the last move to the upside, the financials led the way higher. This move lower last week, well, the financials really led the charge. So you want to make sure you have access and a couple of names on your watch list because they tend to be market leaders. So one way to do that, XLF, it's just an ETF that tracks the financial sector. Just a great way to be involved without being overly exposed to one individual name. Okay, so this trade to the downside, again, the system doing a great job of giving us the exact entry point, the exact targets, the exact stop. This trade was about as stress-free as it gets. Okay, I know people, really struggle with that emotional aspect of trading. This trade, we never took any heat. This trade, we were in and out in about 24 hours. It was just a very picture-perfect setup. So we went ahead and we bought the February 22 put for 47 cents. That was $47 per contract. We came down, hit the full target, closed out of the position, booked a $36 profit, which doesn't seem like a whole lot, but keep in mind, we only paid $47 to begin with. So that's still a 77% return, and remember, we are in and out of this trade in 24 hours. Okay, again, this goes in my book as a home run trade. Okay, again, if you have a larger account size, nothing says you can't come in and trade a 20 lot on XLF. It's a very manageable trade. These are very liquid products. So a great trade there again. ETFs just performing great last week. TLT. Okay, my students have heard me talk about the bond market here over the past number of weeks, and it was really a market that I was getting very interested on the upside. Okay, and we did get this long setup. Okay, again, active swing trader giving us the entry point, the targets, and the stop. And we played this move to the upside. Okay, we bought the January 103. We bought a weekly call in this situation because I was anticipating a pretty quick move. That's just being familiar with this product. I've traded this product for a very long time, so I get a feel for how it moves. I knew a weekly option was a perfectly acceptable way to go. So I bought the 103 weekly call for $1.63 or $163 per contract. And again, that gave me control of 100 shares of TLT at 103. Now in this case, if you turn the active swing trader off, if I turn the calculator off, okay, and let's say we do get into our long trade here. If you do not have the active swing trader calculator telling you where your exact target points are at, where your exact stops are at, as soon as you hit this little high here and price action starts to pull back, I bet it's a pretty safe bet to say that many people are going to exit their trade on this pullback here, saying, okay, I want to get out with a profit. I don't want to let this winner turn into a loser. And most people are probably getting out on this pullback. But because we have that calculator there, with everything programmed into the calculator, we know that all we have to do is follow the system. We knew our targets were up here. Okay, we knew that we hadn't hit a target at this point on this little high right here. There's no reason to jump out. There's no reason to move your stop. We only move that stop when we start to hit target levels, which we did right here on this next move higher. So we did move the stop to break even. We took the risk off the table, and fortunately for us, we were able to hit that full target. We closed out of the trade. We booked $142 of profit per contract, and that was an 87% return. So again, these trades, when I see an 80% return, 100% return, those are home run trades in my book. Okay, that's exactly what I'm looking for. Okay, and let's wrap it up here with EEM. This is the emerging market ETF. Okay, so again, if you want some global exposure, it's great that you have some of these ETFs because it's just an easy way to get that global exposure without weeks worth of research, without guessing which names are best to add to your list. Very liquid product. And the active swing trader works exactly the same here. So we have our entry point. We got short right here. We got short. The entry point was at 39.60. Now this was an interesting trade because if you took the trade right here, notice what happens. It immediately pulls back on us. Did it feel good to come in and see that price action is approaching our stop? No, it's never a fun position to be in. But here again, this is why it's so important not to panic. Okay, we knew our stop was there. We knew if the stop was hit, we would exit our trade. Fortunately for us, the market turned back around to the downside and we were able to see that move down to that full target. So on this move to the downside, I bought the February 40.5 put for $1.20. That's $120 per contract. Okay, I sold it out for $2.35. That's a $115 profit or a 96% return. Okay, here again, I mean, we got in on the 21st. We got out of that trade on the 24th. That's a perfect trade for me. My average holding time, I'm looking for trades that last anywhere from 24 hours on out to 2 weeks. So all of these trades very quick last week. If you're a little intimidated by earnings season, I just showed you 5 different ways that you can be involved with ETFs, still see those powerful returns with very manageable risk. A lot of these trades, what were we talking about? A $200 commitment or less per contract. So it's very reasonable for you to get in with a very small amount of money and get active in the markets to start to build that account slowly. So we continue to just see very consistent results with the active swing trader. Like I said earlier, if we continue to see this pullback in the market, if we continue to see the pickup in volatility, then we could very well be heading into a time that it's going to be very fun to trade with the active swing trader. Okay, these are perfect conditions for us to be involved with. So I would love to see you come on board with the active swing trader to start to experience some of these profits. As always, feel free to contact me if you have any questions at all. Be more than willing to walk you through in more detail how exactly the system works. So my email is mike@netpicks.com. I look forward to talking with you all here in the near future. So I'll be back later this week with another video. We'll take a look at how the market reacts to the Fed meeting here coming up tomorrow. So happy trading, everyone.